The Hedgeless Horseman here. It's October the 28th, 2023. I thought I'd just make a relatively short video, or try to, because I'm have places to be soon. Anyway, so just for starters, I mean, just wrap up the week, I was gonna say. Gold. Yeah, I mean, climbed over $2,000 again, which was interesting. I mean, you probably remember here, I think we had like 9 red candles in a row daily, and everybody was becoming bearish, and I saw $1,400 gold calls again. Excuse me. But like, it's just in my DNA. It's like, you know, no trend lasts forever, and okay, it's gone down 9 days in a row, and of course, I mean, for me, the juniors are so dirt cheap that it's like, hey, if gold goes to 1,600, I still think my juniors would be cheap. So to me, it's like I'm playing with a loaded dice, if you know what I mean. It's just a matter of time when the actual miners go into an upcycle, because gold for sure is not far away from all-time highs, or breaking out to all-time highs. And still, the junior sector especially is just trading like absolute crap. And I mean, that's obviously the opportunity. So it's like, if you really complain about this sector, then I don't really think you understand the opportunity right now. Because, okay, when do you make the most money? That's obviously going from, you buy at the lowest possible point, then it goes up to the highest possible point, and then you sell. I mean, nobody's going to bottom ticket anyway, but still, I mean, we want big changes. That's how we make the big returns. But that's so funny when typically people seem to think that, yeah, you make all the money in the bull market. But when do you know if there's a bull market? And I've talked about this a bunch of times. Like, I mean, look at how many false breakouts there were here. And then, you know, it popped up here. Well, did you buy here? Yeah, you would have made some money, but then it would have retraced below where your entry point is. Meanwhile, just buying, the lower it goes, the cheaper it goes. I mean, that's your best offense and defense. So I mean, it's not really the bull that makes you the most money. It's having bought in you know, the depths of a bear, really. And the way I see it now, okay, we're not too far off from perhaps making an all-time high. So it's like, okay, the juniors are obviously not reflecting that at all. They're not even reflecting the current price of gold, let alone a breakout and a new bull trend or a multi-year bull market or whatever. It's like, it's pricing in that this sector is, well, that the gold price is maybe down here, and it's going to stay down here for years to come. So I mean, it's total dislocation, and we got retail sentiment to thank for that, and I'm not complaining. I mean, I think this is the biggest broad daylight robbery I've ever seen. I mean, 2015, the sector was cheap, but gold was also at 1,100, and the whole sector was basically losing money. So it made sense that at face value, all the gold projects were kind of worthless except the really good ones. So why should the juniors be trading high, you know, pricing in a good gold sector where the projects actually had value? But now they actually do have value, even with inflation and all of that. And of course, the market is supposed to be pricing in future that is not here yet, and, you know, balancing all the scenarios. So yeah, you know, people talk, well, inflation is up, yada yada. Yeah, of course inflation is up, and let's say it gets worse. I don't actually know what inflation is doing right now, but still, okay, what's the end game if inflation, you know, kills the system? A revaluation in gold and all of that. So then the miners should be pricing in that yes, if the inflation is a drag right now, eventually it comes a breaking point, because that would break the system as well. And then you would see gold and silver really kick up in value, and then the juniors would be cheap in that scenario as well. And if inflation doesn't really well, gets subdued or doesn't go up that much more, well, then they're cheap right now. And every single mine in operation today is, going to be depleted one day. So there's a lot of fundamental trends where it's like you kind of know where the end point is going to be anyway. It's like, a rising gold price. And more importantly, perhaps, in relative value, gold going up versus currencies or whatever. Excuse me, I'm still having a bit of a cold. And it's like just, the reminder, we've seen Bear Creek even make another lower low. And like I spoke to a friend today and just reiterating the fact that people think that if you're down 50%, for example, in your portfolio, it's like, that's not even a problem. When I started buying juniors in late 2015, I think I went down 55% first, or I think I was down 54% or something, in just 4 months or whatever. So it's like, okay, at face value, that's a disastrous result if you believe that the market is right and all of that, and you don't have a strategy and you need to look right in every single time frame, because otherwise it's like it doesn't get much worse than cutting your portfolio in half in 4 months. But I just knew, I already back then had the simple understanding that that was just a cheap sector getting cheaper. Meaning that if it goes down more, it's closer to the next uptrend and from a lower level. So the buys just get better, which means by default I can't sell. I should rather add more, which I did. And then the next rally came, and again, it's not like this sector goes up 100%, it goes up hundreds of percent. I don't know where we're gonna, compare where we are now, and of course, and I've said this a bunch of times, people see this action. A lot of people get in any sector near a high. That's just how it is, and then they sell out near the low, and then get into another hot sector that quote is working. So they never break the cycle. They get in late, after the returns have happened, buy, ride the downtrend for a long time, and before the downtrend is gonna change to an uptrend, they sell out and find another sector that has gone up already, and they project that expensive can always get more expensive. I'm buying high because it can always go higher, and that's why they sell, because it can always go lower. If you never break that cycle, you're never gonna make any money. You should stick to index funds. That's just how it is, because the most volatile sector is the hardest and also the most profitable if you just understand how stupid it is. And this sector is incredibly stupid. Goes way higher than it should and goes way lower than it should. And then the thing is that it always swings back. There is not a single time in history where the mining sector has forever gone down or forever gone up. It's called a cyclical sector. And what was I going to say? So yeah, this is just a matter of time. And again, it's like people see the last 3 years as evidence why you can't make money in this sector, why you always lose money in this sector, why you shouldn't be in this sector. They look at what has happened and what they have experienced and believe that that's just how this sector goes forever. It's like, because they haven't seen anything else if they got in any time in the last 3 years, really. The thing is that what gets me bullish is, of course, where we are relative to where we're going. I know we're going to hit, this sector is going to be hot one day. And when we go from the levels we're seeing out there, valuations-wise, sentiment-wise, the worse it gets, the larger the coming move. Because obviously the largest possible positive moves is from a peak in extreme pessimism to a optimism peak. The lowest point to the highest point, that's the biggest move. I don't need to bottom tick. If I get in around the bottom, that's great. And if I actually ever sell, if I get out near a high, that's also good, because this move alone is pretty big. And if you average down, you always decrease your average. Obviously, that's not what most people do. People switch to maybe hold down here, and most people switch to sell eventually. The longer this takes, the more they will switch from buy to hold or hold to sell. even though it should be obviously the opposite way, because every single day down or any additional day in a bear trend, it's one additional day closer to the inevitable bull market, and from a lower starting point, so the buying becomes exponentially better than holding and selling. Excuse me. But the thing is, okay, where are we at now? We're at an extreme. We don't know how, if it's gonna get more extreme, how long it's gonna last when the bottom is in. We'll know that months after the bottom is in, where the actual bottom was. So that's not something I try to guess or bet. I mean, again, it's like if somebody asked me if this would have been the bottom when we were here, yes, I would have thought so. But that's not my game, because if I would have done that, it's like, okay, I think the bottom is in, it's safe to get in. Well, that was much worse thing to do, buy back in the entire portfolio here than just averaging down and buying more the lower it went. But hey, I mean, that's just human nature. That's typically always going to be like that. And yeah, minus 50%, that's like a walk in the park. But most people, again, it's like there's only, I would guess, like sub 5% that actually make money over the long term. And that's the funny thing, because if you're in this sector during this run, only less than 5% lose money in this sector. I would think even less than that, perhaps. When we go from here to here, less than 5% actually make any money. Okay, so here you can't lose and here you can't really win. Okay, if you know that, obviously there should be a way of skewing those odds instead of ending up with 95, even though the market is sometimes rigged in extreme favor of a holder and extremely against us if you're a holder at another point in time. Why does everyone end up, well, why does 95% end up losing anyway? I mean, there's a bunch of stuff like, companies can go bankrupt and dilution, yada, yada, yada. But from a, cycle and macro perspective for the sector overall, I mean, since this, well, from here to here, at least in Bear Creek Mining, for example, it has retraced the entire fall. And still, almost nobody actually makes any money, even though there are periods where it's extremely rigged in our favor and everybody makes a shit ton of money. It's just obviously because nobody's actually in it from the lows and make shit ton of money. They get in here, sell down here, get into the next hot sector up here, whatever. So it's like, and I'm going to keep saying this. I mean, we've passed I think this was like the no selling point already, in my opinion. Even if you're, let's say a trader. Well, at least a longer term swing trader. But has it been fun to sit like, 2 years of downtrend action? Of course not, but that doesn't matter. Every extreme gets corrected sooner or later. The more extreme it is, the more corrected it gets. It's like, okay, extreme downward action, extreme upward action, extreme downward action following that. So it's just a mean reversion kind of thing. And it's going to happen. 100% sure we're going to have a bull market in the miners again. It's just a matter of when it starts and from what level. That's the only thing. We know we're low enough. That's beyond good enough for me. I know exactly what I should do if this sector gets any cheaper. If it stays this cheap, whatever. Just that's what I'm doing. Buying as much as possible before this bear market is dead. Before the bull kills the bear market. And it's like, just think about it. Okay, there's no excitement now, but the central banks are buying hand over fist. I mean, they're the biggest gold buyers they've been in, I think, at least like 40 years or whatever. And the retail is not participating. Funds aren't really participating, but the East retail, I think, are participating. Just imagine a future. I mean, we saw in the last 2 years where there was, it was hard to get any silver coins. They were sold out in most places. Some gold coins, I think, were out of stock as well. What if this is for real? I mean, there is no bigger demand driver for gold and silver than rising prices from a retail perspective. So just imagine what could happen if you know, hey, this triple top doesn't hold, we go through it, we actually get some momentum, some FOMO, whatever, and people want to buy gold and silver coins. And let's say it, you know, runs out, or let's say, you know, World War III comes along, or there's a big government default, or, you know, problem with the dollar, whatever. It's like, if we ever in the next 5 years go into a period when it's like, yeah, okay, gold and silver is something people really want, and imagine if that goes out of stock, or the prices are too high, or whatever, or a combination of both. If you can't buy silver in the ground or gold in the ground, or you think it's too expensive, do you think the gold and silver in the ground belonging to the juniors will be trading at these levels? If there's, you know, a fear of need or whatever. No. You can just imagine the delta that could happen going from bear market fire sale prices to a future where everybody is scrambling to actually get exposure to gold and silver. And especially if it's hard to get it via the ordinary physical route, and you actually have to go and buy it in the ground. And then it's like, because always people tell me, you know, well, this can go on longer than you think, or whatever. It's like, yeah, everybody says that at every single bottom. It doesn't matter. In the end, it doesn't matter. How long should you be willing to wait for a 360% return? Many years. 637%, many years. The big play right now is, of course, to be part of one of these epic mean reversions that always happens. Because these legs are hundreds and hundreds of percent. If your portfolio is exposed and still around, minus 50% won't even be a problem. My portfolio tends to go down, or at least my median stock, I would say, tends to go down 50% at least, you know, every 2 years or whatever. Still has not been a problem, because I'm proactive during the low. Some juniors go down more than others. Some juniors stay the same price, while other juniors also are staying at the same price, but the value has gone up. So when the actual turn comes, they have more to reprice. So maybe I go down 50%, reshuffle a bit, and then, you know, the portfolio doesn't go up 100% to just retrace the fall, but it goes up 300%, 400%, whatever. Then you end up making money, and then we go into a sucky period, fight for survival, or you have to fight to have a few greens, but it doesn't really matter. Just as long as you're not bankrupt or diluted down 80% or whatever, then it's typically not really a problem. And of course, the more you buy, the lower it goes. If you actually buy more, that just makes it even easier to claw back. Because if you started buying here or whatever, bought nothing, yeah, you go back to even. But it's like, if you start really ramp up buying down here and lower your average from here to here, whatever, then all of a sudden you're in a good profit. The more you add lower, the lower your average goes. I mean, the more money you'll end up making. So you bail out your bad timing back here by using common sense and being aggressive, the better the opportunity becomes. So it's like, it doesn't, from a timing perspective, it really doesn't matter. Because I never try to time anything. I don't know when a top is going to be in or when a bottom is going to be in. I just accept and make the best use of what the market gives me. If it goes lower, then I'll buy even more. Lower my average, make more money when the turn comes. Anyway, I was going to say, the one reason I want to make the video was just to talk about, you know, let's look at an early stage exploration story. Okay, you have Hercules Silver. Okay, when you just look at, let's say, or my point with this is going to be, a news release is really valuable when it says something about the next 10 or the next 20 or next 30 or whatever. So I mean, you could see the news from Hercules Silver. Like Hercules Silver intersects 185 meters of 0.84% copper, yada yada yada, including 45 meters of 1.94% copper in first deep hole drill at Hercules. If you just look at the assay, it's like, yeah, this is a great intercept. This is a really great intercept. But it's the context that really is important, in my opinion. Okay, so what's the context? Again, just the assay. Excuse me. Just the assay itself is one thing, but there are other copper juniors that can drill something similar. So that's not what makes this stand out. And that's not why it has reached 165 million market cap. Because there are other juniors out there trading for way less that which can produce hits like this at least. Now there's the geological context is that this is the first hole ever, which should signal something about the robustness of the system, like Kennerland study. If you pull out a 100 gram meter plus hole within the first 10,000 meters of drilling a target, that's a very good sign. It could be substantial, because if you're able to hit a 100 gram meter hole with the first 10,000 meters, it suggests it could be a robust system. Well, they did this on the first ever hole to test the first deep hole to test the copper system, or potential copper system. So just a random spot they get these kinds of results. Then you have to ask yourself, okay, this is just an arbitrarily location where they put down a drill hole. It hit like this. So again, like I talked about, for either the cake just happens to be good in that particular few inches intersection where they actually hit it, or this is a sign of how good the cake might be in a lot of places, because it's just a random location where they actually tested it, if you know what I mean. Sure, it was in the actual anomaly, but still, who knows what the rest of the anomaly will grade. They've only took one taste of it, and this is how it tasted. Is there anything that suggests that all the rest should be worse or better? I mean, if this would be an average, that would be superb. Especially this. And then there's more context. Not only is it an impressive hole, extremely impressive hole on the first try, which is, you typically don't get ore grades on the first tries, especially if it's a blind target, which this is. Okay, that's alone. First blind hole at depth. Okay. Size of the target, obviously. We have the IP anomaly. So we can see, okay, they hit the edge of a limited IP survey, or where the anomaly shows up from a limited IP. That first target from the limited, it just gets cut off by the coverage of the survey. So if you have that big of an anomaly that's still wide open, and the first ever test brings you this, that's obviously good context. Because let's say the anomaly was 200 meters by 200 meters, and you put it down a hole. It's like you kind of already know the limits of it in that case. Because if that anomaly tastes like this, and it, you know, that's good. But if it's only like 200 by 200 meters, you know there's no, well, the odds of it being a big discovery is obviously lower if one assumes that, well, the anomaly correlates with, you know, copper mineralization. No, it's a huge anomaly as well. Then the fact that they hit supergene mineralization, which is, I think I read up on Escondido, or I think it was Escondido, like 65% of the mineralization in, this was years ago though, but back then I think 65% of the ore was in the supergene horizon. And that's typically very atypical to even have supergene zones. Basically at the top of the erosion of the copper system, you have enriched copper mineralization. That's not even in the ore body, but you have an enrichment. So let's say the grades there, let's say it's in the outer shell or whatever, not really that high, but still you can form a deposit by enriching. So you have a bunch of low grade, and then that gets eroded and remobilized into a high grade blanket. All of a sudden you went from having no ore to a thinner zone, but with ore grades, like 45 meters of 2%. So that might be a added sweetener in itself, and especially since it starts quite near surface, which would probably make payback be quicker. So it would help the economics that you have high margin stuff close to the surface, so you pay back the capex much quicker. So from an economic standpoint, an economic risk standpoint, that the fact that there might be a big supergene blanket could be really, really nice. Then we have another big thing, which is that this was drilled into what is believed to be the pyrite shell or phyllic alteration halo, which is not even supposed to really be any to contain ore grade. And still, when they went through, which I assume that they went through the supergene blanket and was out of the blanket and went into the pyrite shell, they hit 0.5% copper, which is really good for the supposedly barren portion of the system, or not barren, but like very low. It's expected to be have low mineralization. So there's a bunch of stuff that just makes this hole kind of incredible. It's like, first, a numbers game. Statistically speaking, to have this good of a result on the first hole is extremely abnormal. Size of the target, I would say it's kind of abnormally large. It is a very large IP anomaly and it's wide open. Supergene mineralization, very unusual for Canada, which might be an added sweetener. The fact that they hit this hole graded this much in the pyrite shell, which is expected to be low grade, and then they also saw bornite, which is a sign that it's a robust system. And then you have other stuff to the actual success, like the jurisdiction, infrastructure, and permits and all that, which are all value adds. Like every single ounce or pound of copper, for example, that gets found is probably gonna have a higher value here than in many other locations around the world. So it's just, the thing is, in my opinion, the trick is to really be quick about realizing the geological context, because otherwise, I'm not saying you need to be a geologist. I'm certainly no geologist, but that's why it's like having a large watch list and quickly appreciating what the news release says about the next 10 or 20. Because the only thing we really need, we know there's a large copper footprint, but we also have the anomaly, the IP anomaly. Anybody could see, anybody could do some crude calculations, and then immediately, first hole into that anomaly, it's like already a big deal just based on the size of the target. Then it's like, this is the first hole. So either they were extremely lucky or they hit what appears to be a very robust, abnormally robust copper system. Because there's no shortage of copper porphyry targets out there. But to have a hit like this on the first try, I don't think that's a lot of copper juniors that can pull off. Because we've seen some stories out there that can, produce 100, 150 meter, 1% copper. But those are typically well-drilled systems. So it's like, they kind of know where, the system itself might not be extremely robust, but yes, there's a higher grade core. And this time they hit it in the pyrite shell. It's like, how robust is this system if you get these kind of grades in the pyrite shell? And again, supergene mineralization. What does that mean? So if you add if I had followed Hercules Silver much better, and was on the lookout for a hole like this, and quickly understood every single thing of the geological context in the news release, theoretically, I hope I would have just put in as much money as I put in immediately. But it has taken, first of all, I was traveling when the news came out. I had to refresh my knowledge on Hercules Silver, the porphyry target, because I got into Hercules Silver mainly for the silver portion or the silver story and all of that. But it's like, that is, in my opinion, or this is an example, I think, it's like what's most important, I think, is quickly realizing the value of something. I mean, this doesn't say, I mean, from a one news release you can't say, or this news release you can't say, okay, I know it's going to be a $2 billion price or a $1 billion price or whatever. It's just that there's a bunch of geological context, especially tied with the assay grades themselves with the geological context in mind, that makes this extreme standout hole. Whereas there are other juniors that can recreate these grades, but in those cases it might be almost meaningless. It's like, well, the system is already cut off, or it's a small footprint, or whatever. Exact same grades, but totally different geological context and other context. And there's other stuff I thought I would go through. So it's like, okay, what's the lesson here? And a reminder to myself is like, it's a good idea to have a lot of early stage exploration plays on your radar and kind of know the context. Because in my opinion, I'm not in love with pre-discovery plays right now, and typically they don't make too much sense. But if I really understood, had read up on Hercules Silver, and just waiting for this piece of the puzzle to come out, if I had all this in mind while reading, some stuff you actually found out from the actual news release or interview, so I can't say you could have a totally clear picture, because more information got out as time passed, or at least with the news release. Still, imagine the edge just being first to appreciate this context. It took me, I was traveling, and then it took me a few days to really appreciate the geological context here. So the more I read, the more I thought about it, the more bullish I got. Obviously, if in a perfect world I would get all of this, get the geological context, yada yada, immediately after reading the news release, and whatever position I have now, I would have gotten in immediately after the news release at, I don't know, 50 cents or whatever it was trading at. But I was buying as it was climbing the more I read. But just imagine that kind of edge, just to be quicker than most to appreciate just the statistical context and appreciate what just one hole actually means for the company. Because it's this alone isn't what gets me really bullish. It's this together with this. So I mean, it's like just to be able to quickly vector in on what is the actual because there's a bunch of stuff that gets stated in a news release. But what are the important things? Again, this, if the news release just stated this and there would be no IP anomaly, they just did a blind hole, they had no soil samples, that's obviously very different than having a huge IP anomaly which this tested. So just it's like to quickly focus on, okay, what does this mean? Well, okay, this alone doesn't tell us much except it's a nice hole. Oh, but first hole ever, okay, statistically very abnormal to have this kind of grades on the first try. That again, that immediately speaks to the potential robustness of the system. Size of target, okay, the price is big. I mean, they tested one corner of a 1.8 kilometer long anomaly or whatever, that's cut off in width only from lack of survey results. Okay, so the price is obviously big, so robust system, large price. Supergene, well, okay, they hit supergene mineralization, well, that's from an economic standpoint could be really good. Oh, it was in the pyrite shell, Well, again, what does that say about the potential robustness of the system, the rest of the system? And boronite, that is like a good sign and all that. I don't need to be a geologist or a mining engineer to appreciate those kinds of things, obviously. This is, relatively common sense. Yeah, super demineralization might not be too, you come across that too well, but it's like pyrite, shell. Well, yeah, that takes some knowledge about porphyries to appreciate that you're expecting low grades here. But still, it's not like you need to have a, master's degree or be a, have a PhD to just, okay, well, expected low grade, they hit high grade. Is that good or bad? Obviously, that's good. Size of target, again, it's like you can do a relatively quick ton calculations from, okay, you got 1.8 kilometers, and then, they hit 85 meters, and that was cut off, and the news release says it is expected to go way beyond that. Okay, or if you just use the 45 meters of the enriched zone. Well, if the enriched zone is, 45 meters wide, 500 meters, 45 meters thick, 500 meters wide, 1.2 kilometers long, whatever. All of a sudden you have, a lot of copper, a lot of high-grade copper. So that's not the trick to be a geologist or a PhD. It's like, this is kind of common sense thing, just based on, balance of probabilities. It's like, let's say, okay, there's a country you've never been or whatever, and you just ask, you wonder, I wonder if the women there are good looking, and you ask someone, hey, take the first woman you see on the street, take a picture of her and send it to me. It's like total random, let's say, or you shuffled, if you could shuffle like I'm gonna say a random woman. It's like, okay, you see a picture, that woman is really, really good looking. You would immediately just kind of assume, oh, if that's a random woman from country X, I would assume that they're really good looking. And then your friend does the same from another country, and let's say there's a really ugly woman in the picture. You would just assume, if you had to guess, it's like, well, if a random woman looks like an 8 or a 9 from country X, okay, I assume that they have very good looking women, and other country you might assume that, well, okay, that wasn't that impressive, so it might be the overall women population there might be lower than the average, world average, in terms of looks, let's say. That's basically what a first hole means in this case. It's like it's only one test, and if that comes out well, it's like, okay, you at least know that it can be this good, and since it was a random test, it might be a pretty fair representation of the quality of that system. And in this case, it's actually in the phyllic alteration pyrite shell to boot. So it's like layers of multipliers in terms of again, this alone is one thing, but when you take the importance of it and just go through a few layers here, the importance gets multiplied. It just gets more impressive if it's first hole, a lot more impressive. Maybe the value of this information or the importance of this goes up by 4x size of the target, multiply that again, and then super demineralization, and the fact that it's in the halo, all of a sudden this goes from an interesting thing to like, Jesus, I've never seen this kind of stuff before. Yeah, same assays, it's just the context is totally different. Yeah, anyway, I thought I was going to go through more stuff, but I gotta run. But I hope my point being that you don't need to be a geologist or a mining engineer, but it's a very good edge to be aware of a lot of stories, and so you're already kind of prepared for when a explorer actually drills. Because again, I'm not too big of a fan of getting deep in a pre-discovery play, because most companies will not find anything. But if you have a good sense, okay, this company is drilling, I'm going to have a look out there, because in my estimation, it looks like a big target. If they hit something good on the first few holes, that might be a good sign. If you knew that, oh, the IP anomaly is that big, this is the first ever hole that comes back like this. I mean, alarm bells should be going off immediately. But if it takes you a day or 2 or 3 to just read up on pyrite shells and super demineralization and to figure out the size of the target and didn't even know it was the first hole ever. I mean, if it takes you 1, 2, 3, 4 or a week to put this in its proper context, you won't get bullish, really bullish, if you even arrive at that conclusion in maybe a few days or a week. And in the meantime, people who understood it, just understood this, read the same news release, but understood the context, a few days quicker than you. Maybe they get in at 30% cheaper price, and will end up, if things go well, maybe just them being a few days quicker on appreciating the results. Maybe if this goes really well, you'll end up making let's say you end up making a 10 bagger. They end up making a 15 bagger or something like that. I mean, just a few days of additional days to process the actual information. And in my opinion, you don't need to be a PhD to appreciate this. And if you're not even aware of the story, it doesn't matter if you're I was going to say a PhD. So just to have okay, you have a watch list, whatever, and you kind of, you follow a bunch of stories. Not that you need to buy them, but okay, they are doing a maiden drill play. Well, I'm not interested in the pre-discovery play, so I'm not interested in the story. Well, in reality, it's probably good to actually have a grasp on many of these early stage exploration stories when they start drilling, because in that case, you might have a one-up. You might not be a latecomer. I was a latecomer in Hercules for different reasons. But still, it's and this is a reminder to myself, okay, I don't need to love or buy pre-discovery plays, but it doesn't hurt to actually have some type of context, because if it surprises with a result like this, I might have a day or extra. I might be a day or extra quicker than most other people to figure out why this was such a impressive hole. Because I don't like when I see it's company X drills a really good hole. If I don't understand the geological context, I'm not going to just end up buying, they put out a huge hole. But if I just read first ever hole or whatever, it's immediately alarm bells go off just from that. Okay, first try, they hit a result like that as per the Kennerland study. It's you should be paying attention. Or if they, they drilled immediately below a 2-meter outcrop where they know they have good results, but nobody has any idea what kind of scale it is, then it's hard to put into context, because they drilled where they know there's gold, but we have no idea if this is a 2-meter wide vein or if this is part of a massive target which just happens to be outcropping there. So I think stuff like that is really one way to get an edge if you want to play the exploration game. Quickly appreciate the same information that everybody else reads, but quickly put it into context, appreciating how, okay, it's a good result, but then what? Is it just a good hole because you see good holes all the time? Okay, not only this, but that and that and that and that. Okay, and if that's not enough, we get this, this, and this all of a sudden. So immediately it's same assays for one company, which doesn't have anything close to this, might be totally meaningless and you're not even interested. But same results, but with all of this kind of context, all of a sudden it's whoa, I haven't seen this since, since I've been investing or whatever. So again, same assay results. We know most people look at the assay results, but it's what the assay results run usually says about the next 10 to 20, because this news release with the context signals that, hey, this might be a high grade and very large porphyry system in a good location slash jurisdiction with a supergene blanket. That is more important than the actual grades. Yeah, thanks for listening. Consider me biased. I own shares of Hercules Silver. Don't invest money you cannot afford to lose. There's no guarantee you'll make, or you or I will make any money from here in Hercules Silver. Yeah, I don't. It's like it's one, in my opinion, good-looking high risk, high reward story. That's it. No guarantees. Bye bye.